Have you ever wondered why some people quietly build wealth, while others race around in flashy cars, Insta-posts full of designer bags and still don't move forward? Why do the truly rich often fade into the background, only to pop up when things are way ahead of the rest of us? Could it be that invisibility is the real secret asset? If you're tired of seeing headlines, another millionaire investor bought this, and you feel you're always chasing the noise instead of the growth, this video is for you. We're about to reveal behaviors, mindsets, and high-impact strategies that the wealthy use to stay invisible and yet powerful until they declare their victory. Imagine building a stock portfolio, setting up passive income streams, compounding capital quietly, and letting the world think you're just another person. If you are seeking financial freedom and ready to make it happen, hit subscribe. We're committed to delivering practical advice and inspiration to transform your life. Ready? Let's get started. Number 1. They treat wealth like a back-office operation, not a showcase. When you flick through social media, what do you see? Private jets, luxury cars, super yachts. What you don't see is the rich folks quietly running their hedge funds, shifting into dividend stocks, allocating portfolio capital across real estate, index funds, and alternate assets, managing tax-efficient investing, all behind the scenes. The wealthy treat wealth building like an enterprise in stealth mode. They spend less on impressing others, more on growing assets like ETFs, mutual funds, dividend-paying companies, and rental properties. When wealth looks loud, it invites coveting, competition, taxes, lifestyle creep. When wealth stays invisible, it grows without interruption. Actionable step. Start treating your financial life like a business. Set up a private wealth operation spreadsheet, assets, liabilities, allocations, stocks, bonds, real estate, hedge fund-style alternatives. Every month, update the numbers. Avoid posting or announcing your wins. Let your asset base do the talking, not your social feed. Imagine you're the backstage director of your financial future, not the actor seeking applause. You don't need a flashy base to be rich. You need a disciplined internal system and portfolio that compounds. If your only goal is to show off today, your future, you will pay the price. Number 2. They leverage quiet capital movements instead of flashy headlines. Most people chase headlines. Hot IPO, Apple stock spiked, crypto exploded. The rich? They lean into subtle capital flows, fixed income in tax-advantaged jurisdictions, strategic allocations in index funds, safe stocks during recession, hedge fund allocations in private deals, monthly dividend stocks. These aren't headline grabbers, but they stack quietly. For example, instead of buying the iPhone the day it drops and posting it, they might channel $5,000 into an index fund of S&P 500 companies, let it ride, let it compound over years. Quiet capital moves reduce risk of attention, reduce taxes via smart structuring, increase time arbitrage. The rich have time working for them. Review your next $1,000 of discretionary cash. Ask, will this generate equity growth, dividend income, portfolio diversification, or will it be gone in a day? Choose the former. Set up an auto transfer so your capital flows into your quiet engine. Say $200 monthly into a dividend-paying ETF or an index fund. Think long-term investor, not short-term consumer. If you're waiting for the next viral opportunity instead of putting your money quietly to work, you're missing the momentum compounding effect. Number 3. They use privacy as a competitive advantage. In business and investing, information is leverage. The less people know about your strategy, the harder it is for them to compete. That's why many wealthy individuals operate through layers of privacy, trusts, holding companies, even anonymous investment vehicles. They understand that transparency to the wrong audience equals vulnerability, so they protect their data like it's currency. Think about it. If people don't know what you're building, they can't copy or sabotage it. They can't undercut your deal or mirror your trade. That's how billionaires stay one step ahead. They use information asymmetry. Practical takeaway. Treat your ideas like assets. Don't reveal projects until they're ready to scale. Don't share every stock or crypto move. Keep your portfolio structure confidential. Invisibility here isn't secrecy for ego. It's strategy for survival. While others show off their plans, the rich execute theirs in silence. And by the time the public learns, the wealth has already multiplied. The moral? In the economy of attention, Privacy is the ultimate currency. Number 4. They build wealth through boring, predictable compounding. Everyone wants excitement, fast profits, viral success, explosive growth. But the wealthy understand that wealth is rarely exciting. It's boring by design. They buy index funds, hold blue-chip stocks, collect dividends, reinvest quietly, and let compounding do the heavy lifting. Meanwhile, others chase trends, lose focus, and wonder why their bank accounts don't reflect their hard work. The truth? Predictability is the millionaire's superpower. When you know your investments, your risk, and your time horizon, you sleep better and grow faster. Stop looking for fireworks, look for systems. Build a boring portfolio, mix of ETFs, dividend stocks, and safe bonds. Automate contributions monthly. Don't chase market timing, chase consistency. You'll rarely see these people flaunting success online because the results speak eventually. 1 decade of quiet compounding can outperform a lifetime of flashy risk-taking. The rich know, boring builds empires. By the time others notice their wealth, it's no longer luck, it's mathematics. Number 5. They avoid debt that signals status. There are 2 kinds of debt, productive and performative. Performative debt is what most people fall for. Luxury cars on loans, massive mortgages for appearance, designer labels on credit cards. The rich, they avoid it like poison. They use debt only when it multiplies wealth, leverage for income-generating real estate, business scaling, or portfolio expansion. They don't borrow to look rich, they borrow to get richer. That difference keeps them invisible longer, because they don't have to maintain the illusion of wealth. Their balance sheet tells the story, not their lifestyle. Before taking debt, ask, will this generate income or only status? If it's the latter, it's liability disguised as progress. Invisible wealth thrives because it doesn't rely on credit validation. And that's the irony. Those living quietly debt-free often outlive those flaunting least luxury. In a world where everyone looks successful, real power lies in being debt-free and untouchable. Number 6. They invest in knowledge that compounds forever. While the average person buys products, the wealthy buy perspective. They treat knowledge as equity. Every book, mentor, and mastermind expands their earning capacity. Because unlike cars or clothes, knowledge compounds without depreciation. You won't see them brag about courses or seminars they attend, but you'll see the results in their decisions: sharper risk assessment, smarter asset allocation, and strategic patience. Allocate a learning budget. Even 5% of your income invested in self-education yields exponential ROI. Read about portfolio diversification, stock market psychology, and wealth psychology. The invisible rich don't chase trends, they study systems. They don't flaunt degrees, they master disciplines that create leverage. That's why, by the time others start Googling how to get rich, the quiet ones already own the knowledge and the game. Invisibility here isn't silence, it's preparation. Knowledge doesn't need validation, it creates it. Number 6. They build influence without needing attention. Influence and attention aren't the same. Attention fades fast. Influence lasts decades. The rich build invisible influence through equity stakes, strategic partnerships, angel investments, and board positions. They might not have millions of followers, but they have millions in ownership. Because real influence doesn't come from being seen. It comes from controlling assets that move economies. While the average person wants recognition, the wealthy want reach, silent reach that multiplies through networks, not hashtags. Next time you crave validation, redirect that energy into leverage. Instead of posting, propose. Instead of seeking likes, seek ownership. The invisible rich use influence like a hidden current, unseen but unstoppable. By the time they surface, they don't need to prove anything. The world already runs on their decisions. That's why you never see power coming. You only feel its ripple when it's too late. Number 7. They reveal wealth only when it serves purpose. The final reason the rich stay invisible: timing. They understand exposure is only useful when it drives impact. They don't reveal success for applause. They reveal it for leverage, to launch a fund, to inspire investors, to scale philanthropy. By the time you see their wealth, it's no longer growing. It's already matured. The silent stages built the foundation. They emerge not to impress, but to influence. And that's the beauty of invisibility. It allows you to design, build, and perfect before the world interrupts. Define your visibility trigger. Decide at what milestone you'll share success, not for validation, but for purpose. Maybe it's when your business hits 1M revenue or your portfolio achieves financial independence. Until then, keep it sacred. Build privately, grow consistently, reveal intentionally. By the time others notice, your foundation will be too strong to shake. So, what's the real secret? The rich aren't hiding from the world. They're protecting what they're building. They know visibility can be intoxicating but destructive. Invisibility, on the other hand, compounds power. If you'd like the video, leave a like and subscribe. It takes less than a second and helps the channel a lot. We have plenty of inspiring content coming your way. Share this video who need this. Now, if you're curious about the Japanese Kakebo method of saving money, that's exactly what I cover in the next video.